All right, Chapter 6, Managing Your Money. I love talking about this stuff. Anyway, Chapter 6 is not as long as some of the other chapters. One target, Section 6.1, we're going to talk about providing a background on money management. Section 6.2, describe the most popular money market investments. Section 6.3 will talk about the risk associated with money market investments. Section 6.4 will talk about explain how to manage the risk of your money market investments. And Section 6.5 will talk about explain how money management fits within your financial plan. So as I've been saying, you might want to read the chapter before you do the assignment. And again, the assignments you get multiple times. So I would not take a failing grade. Do it till you get a passing grade, and the quizzes you get 2 attempts. So this just talks about managing, background on this money management. So what money management means here is you are describing the decisions you make over a short period regarding your cash inflows and outflows. Now, it's separate from decisions about investing funds for a long-term period, okay, or several years. So just make sure that you understand that. Liquidity refers to your ability to cover any short-term cash deficiencies. So, Chapter 1, we talked about personal cash flow statements, how that determines the amount of excess or deficient funds that you have at the end of the period. So it's going to come back in here as well about your money management. Using credit cards for liquidity. Some people rely on credit cards, as we will discuss in more detail in the future, as a source of liquidity rather than maintaining liquid investments. So again, you just might want to just read this section over about that. Adequate return. When you maintain short-term investments, you should strive to achieve the highest possible return. So just read some of that. It talks about some assets and liquidity. Section 6.2, describe the most popular money market investments. So these are some common investments for short-term funds, including the following money market investments. So there are money market checking accounts. So you might want to talk to wherever you bank and ask about that. If that's an interest to you. What a NOW account is. Again, these are banking accounts. Savings deposit, certificate of deposit, which I like to call CDs. Money market deposit account, treasury bills, money market fund, or asset management account. Again, every bank has their products and different names. You just might want to talk to the bank where you bank. Overdraft protection is a great thing to have attached to your checking account, but just keep in mind you have to be approved for it. So it does check your credit score and if you're a risk or not. What overdraft protection provides? It protects a customer who engages in a transaction by using a debit card or obviously writing a check for an amount that exceeds the balance that's in their checking account. So what happens is it doesn't overdraw your account and it doesn't return that check, so the person you're writing it to doesn't know you don't have the funds in there. It automatically throws in that money into your account and it covers it. But keep in mind, you would want to pay this immediately back, what you used to cover that check, because you're going to be charged interest. Sometimes people don't know that. Again, you might want to know that. Some of you who've had me in the past, I've talked about stop payment. That means that the institution will not honor a check if someone tries to cash it. So you, the account holder, has to put a stop payment on that check and you will be charged a fee. So again, you would want to know that before you attempt to do anything like that. NOW account, they stand for negotiable order of withdrawal account. This is just another deposit offered by institutions, and they say an advantage of a NOW account over traditional checking is that it pays interest, although the interest is relatively low compared to other bank accounts. But if you want to earn interest, anything's better than nothing, the way I see it. Read about traditional savings, automatic transfers, talks about a CD. They say here CDs that have smaller denominations are referred to as retail CDs because they are more attractive to individuals rather than firms. So we can just read through some of this stuff in the liquidity and then look at the math part, because I'm assuming some of your questions will be, because you usually get some math ones, will be about this area. So just look at how to calculate that. Money market deposit account, MMDA as they refer to it here. This is a deposit account offered by a depository institution. It requires a minimum balance to be maintained, has a no maturity date, it does pay interest, and allows a limited number of withdrawals. So this is probably, if you're going to go to this route, you're probably limited to so many withdrawals a month. So like, if you were going to use this as your main checking account and you have to, pay bills, this would not be for you, especially if you're going to go over that minimum amount, and then, they would, you're going to get close to that, and if you really need money, you won't be able to make a withdrawal. So you really would want to make sure that you don't go that route for that if you're going to use it to pay bills. So this talks about treasury bills. They usually mature in 1 year or less. Just read over this section. Talks about return again. You might want to know what the return on a T-bill is, where you're taking the par value minus what the investor pays, and then you divide by what the investor pays, and that gives you the rate. So again, you might want to know how to calculate that in case that comes up on the homework assignment for this chapter. What a security market is for T-bills, where they can be sold before their maturity. Again, they get help from a brokerage firm. This is an example also, so on the return of a T-bill. So I would make sure you're looking at some of this math stuff before you attempt to do the homeworks. That's just my opinion on that, just to be a helpful hint. Then they're going to talk about money market funds. This talks about some commercial paper. So I'm just highlighting some of the important parts. Asset management account. This combines deposit accounts with a brokerage account that is used to buy and sell stocks. So again, if that's something of interest to you, check it out in your life, in your future. You're probably not there yet. You might hear the term, which is a asset management account, sweep account. That sweeps any unused balance in your brokerage account into a money market investment at the end of each business day. So some people like to do that if they have quite a bit of money. This is just a comparison of advantages and disadvantages of all those accounts that were listed in the beginning of this section. So you might want to look at that in case any of these come up on the quiz or the homework. Maybe take a picture so you have it handy. Section 6.3, identify the risk associated with money market investments. There's always a credit risk or a default risk. So again, you just might want to read this section over. Interest rate risk talks about it's the risk that the value of an investment could decline as a result of a change in interest rates. And then the example, you might want to look at that just in case it pops up again on the homework. To be liquid, though, an investment should be easily converted to cash. Liquidity risk is a potential loss that could occur as a result of converting an investment to cash. So you can just kind of know some of that. There's some economic conditions on liquidity that can be an impact. So look over this section. Risk assessment of money market. This is section 4. Read over this. Optimal allocation of money market investments. So it just talks a little bit about this. So I would look over this section. If you want to keep looking at Stephanie's example from chapter 1, like how she has all these different things, I would still go through some of this stuff. I think it's really a great read. Section 6.5, how money management fits within your financial plan. You might want to look at those 3 key questions you might want to ask yourself, some goals. So look over this section, and then we're at the end. So this is not very a lengthy chapter. It has some really good points in there, and I would definitely read through it before you do any of the questions or the homework. Thank you.